So this is gonna be a quick review on the pound dollar. Okay. Today is Tuesday. We'll be looking at Monday's price action before the beginning of this week, Sunday. Let's go to the previous price action. We can see this big up close candle. Last up close candle before the downward is a bearish order block. So if we take that whole range, actually we took it a little too low. So if we take the whole range and divide it into half, that is the mean threshold of the order block, 1.2409. And how do you know it's an order block? How is it validated as an order block? The low of this candle comes out 1.23943, and the low of this candle, this down candle, it wicks through that low, 23940. Only 3 pickets, but that's enough to change the motion. And that is the insertion of order block, bearish order block. So Sunday's price this high as buy side, and this low noted as sell side. So we have this midnight candle opening of Monday price. So the true daily opening range. This is 2 a.m. 2 a.m. the market starts trending and attacks this buy side liquidity. This is the 15-minute time frame. You can see this is the buy side liquidity. This whole high. This is obviously from Sunday's price action. So we can build this high. So if you drop down into the lower time frames, into the 3-minute, so markets goes above that buy side liquidity just a little bit, and so it's a high time frame inefficiency level, this gray shaded area. So it dips into it, then repels lower. Let's drop down into the 1-minute time frame. So on the 1-minute time frame, the market could reach this level and then decline lower, but it didn't give us. So we have to align ourselves to the market's likely directions. This candle's high comes in 1.24039. The buy side liquidity 1.24039. Why the hell does it stop there? Some random level actually. We have, so the market stops there to the pivot, then comes lower, takes up this low, Still, this is going to be a fun thing now. I see it talks about the breaker as a very strong pattern. So this is the breaker that he talks about all the time. Then it comes like this, then goes into the point of reference where liquidity resides, and when it trades back lowers, this is the area that we look to sell. So breaker is a very strong pattern. So I have trading into the buy side liquidity. We are watching this low. Still, this buy side liquidity is not tagged yet. We are looking for price to rally and dip into this buy side liquidity, but at this candle 2:18 a.m. it stops dead end at that level, right at that level exactly. Then goes lower, then goes higher, taking out the buy side liquidity, then coming lower, then showing a willingness to decline lower. So let's see what we have here. We have a fair value gap here. If price could trade into this fair value gap, this would have been in, what do you say, modern 2022 mentorship 2022 model, but we didn't get that. But why price stopped here? The last down close candle before the up. Okay, this is our bearish order block. I mean the breaker, and the breaker is a very strong pattern. Now, why am I saying that breaker is a very strong pattern? The low of that candle comes at 1.24007, and high of this candle comes in 1.24007. That is called perfect algorithm. That is called perfection. And so this fair value gap is not traded because we have this breaker stopping price from rallying above here. The main threshold of this order block, we don't want price to trade through it. And what we have here, another fair value gap. This can be our market structure shift. Okay, this can be our market structure shift here. Price, we have a fair value gap in this range, so price comes into it, fills in the gap totally to the low to high, and price comes back again, hits that bearish order block. This time we are using this green candle, the bearish order block, and the next time price comes up and hits the low end of that breaker, anyone is a viable setup. So we have this short-term low forming, market trades through it, fair value gap, comes back again, another model 2022 setup. So remember, this is the midnight opening price, so we have market structure shape as going down. What we can target is this low. This is a sell liquidity point, relatively good. This is this sell side. You can target this sell side or this sell side liquidity from previous week. Okay. So we get multiple opportunities to get in. Yes. So here we got market structure shift here. One more time. Fair value gap. Trades into it. If you take out that low of that candle is 23943. High of this candle is 23943. Can get any better. So you can see that a breaker, a bearish fair value gap, order blocks, and many more things are suggesting that the price is bearish. So you can get it. You can use this one, breaker, this third opportunity, fourth, fifth, and many more opportunities. So in this time frame, this is where this is the 15-minute time frame. So we saw that price going above this high right here. Okay. Price goes above, takes out the buy side liquidity, market structure shifts on the 1-minute time frame. We get so many opportunities to entry. The entries never matter. You have to know the direction, the likely direction of the move. So we had sell side. Full screen. So we're on the 3-minute time frame. Using this 3-minute time frame, if we use that as our buy side liquidity objective and this low as sell side, in terms this is the range that we are taking to execute. So that will be the equilibrium. Above that, above this blue shaded line is a premium market, and below it is a discount. So we always want to sell in a premium or buy in a discount. So we get many opportunities in the 1-minute time frame. On the 5-minute time frame, the range is very precise and clear, you can see. And this would be our equilibrium, the 50% line. On the 5-minute time frame, this would be the, well, we don't have any lows in this range. So this would be the low. And remember, this is the starting point of this move higher, digging into the buy side liquidity, and we are expecting price to go. We are expecting a bearish move, let's say it that way. So the market structure shifts here. So this becomes a breaker. So price comes up again, trades into it, but look at the bodies closing, and this is a bearish order block. So opening of that comes in 23937, and high of this candle comes in 1.23937. So can it get any better? Well, it never gets better than the perfect. It cannot get better than perfect. So if we use the 5-minute time frame, we sell at this level, stop loss above this high, 11 pips, sell side liquidity below us. We get a 1-to-1 trade. Of course, we have that high time to do it. If we don't want to be too greedy about it. This. So if we go to the lower time frames, the same trade, we can minimize our risks and maximize the profit. So this would be a review on Monday's London session price action. Another thing that I want you to see, that look at here. This is Friday closing, and this red line is Sunday opening. It's horizontal line. Price goes above, then comes down, then consolidates. Then Monday, we have Monday opening here. Price rallies highs, takes out the buy side, then declines, taking out this sell side liquidity from Fridays. We see it trade down into it. So when we get trade into the sell side liquidity, actually look at these highs. They are relatively equal. That liquidity sweep was not so perfect. Perfect in terms of it didn't dig into the buy side liquidity so much. It was only 1 or 2 pips and declined, and we had this liquidity sweep as perfect liquidity sweep. Look at that, 8 pips dig into the sell side liquidity. So we are in a discount market now. So this market, this is the 50%. The 50% is aligned with that midnight opening price, so we can use that as our equilibrium price point. So we are again going to go down into the lower time frames to see if we can get something. Using the 5-minute time frame, at 4:20 am, we have this short-term high forming. We have this little what do you call it? Sell side imbalance, buy side inefficient. So it's inefficient on the buy side delivery. So the markets gets down into the sell side liquidity from here. So this would be our bullish order block. This down candle, their consecutive order block, consecutive down candles, opening price extended out, out. That is our bullish order block. So you can buy at that level. Remember, this yellow line, the minute opening, is equivalent to the equilibrium price point. So this would be the high that we're targeting. So we can go long below anywhere somewhere here. So you can use that order block, and we have market structure shifting at this candle. So we look for a fair value gap in this candle. Do we have a fair value gap? Looks like we do. And price comes into it. And falls short of equilibrium. Consequent encroachment. The consequent encroachment comes in 23767. Low of that comes in 23768. Falls short of one pipette. We have this candle trading up, validating that down close candles as bullish order block. The next candle opens, trades down into it, rallies higher. Again, 510. We have this candle opening, coming down all the way down, trading into the high of that order block, bullish order block, and then price goes higher. Let's drop down to the 3-minute time frame so we can get a more precise entry. On the 3-minute, actually we don't have a lot. On the 3-minute we don't have so much in terms of. Let's drop down to the 1-minute time frame. So that is the price point entering. Stop loss of 7 pips, and we can target that high for 4. Yes, we can manage to get a 1:4 trade here. So we had that market structure shift at 4:38 a.m. Trades into at 4:46. So this trade only takes not even 2 hours, 139 minutes. So I don't want to cover that New York session, but you can guess what I'm gonna say. From this, above this height, we have buy side liquidity. Market structure shifts after the London move down into the sell side. Market structure shift, price rallies higher, goes above. So we are in a premium again, and there is something magical that I want to show you. Remember this line? That is the main threshold of order block, the bearish order block that we marked on the 15-minute time frame from the previous week, and the market comes above, taking out this buy side liquidity above here. Here as buy side, market trades above, takes out the buy side liquidity, and where can price trade higher from this level? Well, we have this bearish order block, the main threshold of the bearish order block. Hits it, then we expect a market structure shift. So where can I expect that market structure shift? this would be the short-term low. Do I get a fair value gap? Oh yes, we get plenty of them. Price trades into it. We have this really higher above, so this becomes a breaker. So if I extend that line, so low of that candle comes in 24070. High of this candle comes at 24070. So do you want to get price to be more perfect than this? It can get more perfect than this, guys. This is the highest form of perfection. And you can sell at that level. Everything is still on that breaker. Stop loss. Actually, we are in the 1 minute time, so the stop loss, it's not funny, but we got a very ultra tight stop loss, as ICT mentioned in his lectures and lessons. So we are on the premium market. So let's mark this range again. We are gonna look for below the equilibrium, so we can target this low, and this low. This low would be 75 and 75%, and this would be at 62%. So we can target any one of that. If we target that 62% level as buy side liquidity, yes, that is an 6-to-1 risk to reward trade. You could take that. Even though Monday is not a very good day to trade, but this week it's a blockbuster week, blockbuster Monday. So this would be the end of the review of Monday's price action, and I want to say that this is the New York Open trade, and at 8 o'clock we have this consolidation session. So we don't want to trade in that. That's all. Thank you for watching. Subscribe to the channel.